You have Hang Seng on your screen. That one is doing quite well as well. It is a 0.9% gain.
Our poll says 4.7% for the third quarter. That will compare with 5.4% in the previous third quarter.
The NSE circular that had come in once the company was admitted into the NCLT now stands withdrawn.
For now, it's very, very quiet. Yes, there's a green tick, but it's not very convincing.
The market is expensive. Still, a lot of stock continue to be very expensive.
The market is lighter for sure, but it's not really in what can be traditionally called at an extreme bearish point, which leads to a contra move.
The Fed has to keep its foot on the accelerator. They have to keep hiking.
Benchmark indices are down, but mildly, just down, close to about 0.1%.
Indian real estate is looking to merge, and that NCLT order is pending.
The MSCI adjustments will happen in today's trading session. These announcements were made earlier in terms of the inclusions and the exclusions.
That Vedanta Resources, which is the parent, could potentially default.
Morgan Stanley, they have an overweight rating with a target price of 5099.
They're in a comfortable position, and they will meet the first half of the year's obligations.
The weakness continues. We are down 63 points on the Nifty at the 17,329 mark.
Well, that was the day so far. You're with us here on another edition of Closing Bell this Tuesday afternoon. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi. Afternoon.
Hi, afternoon.
Prashant. Afternoon, Reema.
The selling pressure's just picked up, right? It dipped and now it's recovered. So back above 17,300, and that was yesterday's low.
17,299 was the low. We broke that, and now there is a bit of a recovery which is underway. So, and this is happening, I mean, as we kind of walked into the studio and as we sort of were waiting for the show to roll, we're seeing a 30, 40 odd point pullback already. So that's the kind of market we are in. But in any case, yesterday's low of 17,299 is gone. The new low today is 17,255. The other sort of interesting point is that the 20-month moving average is 17,270. So you could kind of look back and say if these lows hold, that maybe the market turned from roughly the 20-month moving average, which is a really long moving average, long-term moving average. And we'll see. But I mean, the last word has not been said by any yardstick. You need some more stability, some time spent before one can say that. Now, the common refrain that I'm hearing is, the market's down 8 days in a row. How can it be so? Markets don't go down in a straight line. And I think one would be absolutely right in saying that. It's very logical as well. But what we've also seen occasionally, go back in history and look at this, during times of stress, sometimes sharp sell-offs happen even from what you would describe technically as oversold kind of levels. So don't rule that out. Just because the market's down 7-8 sessions does not mean that it cannot sell off more. The basic problem is that there is no real positive trigger, event, data, etc. around the corner here or globally, which can provide that pivot, right? I mean, I know it's an oft-used, abused word, but which can provide a bit of a trigger for things to reverse on the upside. So no real compelling reason to go in. And I think that's the basic problem. Global stocks are largely lower. I looked at Asia and how they ended. Europe is lower. I think we've got some inflation numbers, PMI numbers from a couple of European countries, which is basically repricing what the ECB is expected to do. And of course, yields and the US dollar both are higher as well. Most sectors are in the red. Energy, pharma and FMCG are the top losers at this point in time. I put out an ITC chart in the morning, and the only reason I'm mentioning that is because it's still a heavyweight, right, on the Nifty, and it's kind of done very well this year. It's up 15% year to date, even as the market is not. And if stocks like ITC start to turn around on the other side, it's kind of one more leg gone, which could support things. But that was just something, that a setup that I put out, which indicates that one needs to be watchful around these 378, 379 kind of levels. It's not fallen too much, 1.5% or so from those levels since the morning. Rima, hi.
Hi, but there's so many heavyweights, right, which are buckling under pressure today. So you've got Reliance Industries, so that's down 1.7%. Prashant spoke about ITC. In the metals pack, you've got Hindalco, JSW Steel, Tata Steel. In fact, in the top 5 Nifty losers, 3 of them are in the metals pack. Cipla has taken a big knock. That's the top Nifty loser after we got more details about the Pithampur unit, US FDA issues. So many stocks under pressure. The advanced decline ratio actually is not bad. We've got, it's even Steven. So 1,400 stocks in the green for about 1,450 in the red. And that's because the mid-cap index is holding up. The mid-cap index is currently up close to about 0.5%. But as you can see in the last 30 minutes, the Nifty is trying to fight back and defend yesterday's intraday closing level, 17,299. We dipped below that in the last 30 minutes at about 210 is when the markets dipped. But since then, they're trying to attempt a bit of a recovery. Let's see whether we can hold in the last 1 hour.
Oh, absolutely. It's going to be an interesting one. Speaking of recovery, Rima, I was looking at the Adani group of stocks and pretty interesting moves on a couple of these. Let's pull them up. Adani Ports, Adani Enterprises, a couple of others, Adani Green and Power. They're all up and about. The ones that aren't actually are Adani Transmission and Adani Total Gas. And there you could argue that the MSCI index Rajig overhang is not out of the way as yet. They simply moved that process to May. And maybe, there's some more red on the screen because of that, because there will be some outflow. On Adani Ports, for instance, a stock like Adani Ports, quite interesting. It's picked up 50% from the low, from the 52-week low. The stock fell to about 430, 440 thereabouts at the bottom of the mayhem, literally. Pull up a 1-year chart. That was sometime in February. And it's recovered about 45 to 50 odd percent. So interesting recovery underway. Adani Enterprises and Ports is where it is most apparent. Just another name that I want to talk about is Vedanta before handing it over to Nigel. Of course, he's the resident expert on this one. There's been all kinds of dance and drama on Vedanta right from the morning. Let's pull up the stock first. It is still down. Last I checked, it was still down about 5.5% or so. Not sure if we can put up the chart. We just got a chart together of bond yields, not Vedanta, the Indian listed company, but the parent. The parent is having issues with its debt, and therefore there's a question mark about whether they'll keep meeting all their repayment commitments or not. Of course, the company has told us, Nigel did speak to them, that they're absolutely on track and they will be meeting all their commitments. But that's definitely one of the newsmakers of the day. Nigel, but what about the market? I mean, for now, 17,300, but who knows what next, right?
Well, that's right. For the time being, a couple of positives today. It seems like the Adani Group stocks are bouncing back, which is good from a market perspective, because that otherwise was reeling under pressure and pulling one end of the market down. So Adani Group stocks, well, they have done well, but the markets were still under pressure. But still, I'll say it's a good trading session, because the mid-cap index is up close to around 0.5%. It's up 0.6% as we speak, and the small-cap index is up 0.3%. So the breadth of the market is good. Advanced decline ratio is pretty much even, Stevens, telling you that there is some value picking going on in the broader market. I'm looking at a couple of strikes, 17,200 put. There appears that there is buying at those levels. The premium out there is around 25 rupees. So fair to say that there is some buying being seen at those levels. In case things go wrong, well, those put buyers will make some money. However, on the flip side, the 17,300 put, just pull that up for you. The premium out there is around 65 rupees. So these writers, they are counting on the 17,230 odd level holding out. And we have expiry that plays out in the next couple of days. So that mark is very, very important. We have come off the low point of the day. But for me, that 17,230, that's a line in the sand for the bulls. They want to defend that mark on a closing basis. For the timing, we're trading above yesterday's low as well. So that's good news. But the swing factor of the last hour, since it's Tuesday, is going to be the Nifty Financial Services Index. That did well initially in the morning, but that's come in under pressure. So let's see whether or not the Nifty Financial Services Index, that's the one that will swing the index in the last 55 minutes or so. Back to you guys.
Okay, interesting setup there. Let's tell our viewers what we've lined up on the hour now. Adani Group stocks see big moves in today's trades. What's aiding the up move? Details coming up on the show.
Big story of the day, Vedanta. The company clarifies that it is in a comfortable position to meet its upcoming repayments and debt maturities amidst fears about potential defaults at the level of Vedanta Resources.
Auto sales data for the month of February is due tomorrow. We'll decode the key trends and lay out the expectations for you.
And we track market technicals with Jay Bala of cashthechaos.com.
And finally, we'll discuss market stock-specific action with Abhiram Eleswarupu of BNP Paribas India. All this and much more in the next 60 minutes on Closing Bell today.
Well, how should you position yourself in this last hour of trade? That's the question, isn't it? Mitesh is with us to tell us exactly that. Mitesh, hi. Good afternoon. Thanks very much for coming back on. So 100 points down again, but some attempt at a bit of a pullback. I was making this point earlier, Mitesh, that while it is common logic, right, to assume that markets don't go down in a straight line, and we've been down for, this is the 8th session lower now, but sometimes, sharp sell-offs do happen from oversold levels. We've seen that in the past. I mean, I just want you to address that point and then tell our viewers what to do now.
Good afternoon, Prashant. So I think, typically what happens is that when you have this kind of situation, when you have about 8-9 days of, red candles, and you're also oversold on the intraday charts, and you hit a support area, which is what we were doing yesterday, the 200 average, there was a chance of a bounce back. In fact, yesterday, the closing was slightly off the day's low, and we got what typically people will call as a hammer candlestick. But the high of the hammer has to be crossed for it to confirm, which did happen today. And then we immediately started trading below the 200 average. So as you were also highlighting, I think there could be situations when the market keeps on selling in oversold levels. Oversold only means that there's a chance of a reversal, but the signal should come from the price itself, which the price failed to give. So as of now, assume that the trend is on the downside. And now I think, yesterday's high becomes a trailing stop loss on the short positions. In fact, as 17,299, which was yesterday's low was broken, we had taken some put options on the Nifty. So we'll take a mild bearish stand and keeping a stop at 17,450. Having said that, I think the bigger worry is the overall weekly and the monthly indicators, which are slightly turning negative. Now, if this fall continues, then I'm expecting a test of around 17,050, 17,000 levels. And in case that breaks, then I think we'll look at lower levels as well. So the bigger picture also is now mildly under threat. But as of now, I think 17,050, 17,000 thereabouts, I think remains an important area, and we will assume that the market will possibly take support and give some reversal from those levels. On the stock side, I have one buy and one sell. Lalpath Lab is reversing very nicely from oversold levels, so that's a buy. Keep a stop at about 1940 odd levels. Look for 2060, 2070 as the near-term target on the near-term target on the upside and a bounce back possibility. And Apollo Tyres is a sell with a stop at 319 for targets of 303.
Okay, so for now, the bias is on the downside. You bought some put options and you're hoping to ride the markets lower up to levels of 17,050, and those were some individual trading ideas like Dr. Lalpath Labs. Let's talk about the Adani Group stocks. They're seeing some big positive moves today. Vivek is joining in to put the highlight on what has caused these up moves. Vivek.
Well, absolutely right. The Adani Group stocks, all of them have recovered sharply intraday. And actually what's happening is, the Adani Group management has organized investor roadshows, and this has been done in, both Hong Kong as well as Singapore. All throughout the week, they're meeting investors and they're assuaging all of the concerns, especially regarding leverage as well as the bond payments that are up for due. So now, what the company officials have said, and this is as per newspaper reports, company officials say that, the group isn't looking to refinance debt at this point of time or inject fresh capital into the business. In fact, what they've done is they've updated, all of the investors in depth about the earnings profile as well as the debt profile. They've also gone ahead and, highlighted the list of bond prepayments that they've done and the list of bond prepayments that they intend to do in the coming months. On the back of that, today, if you're looking at the stocks, Adani Enterprises, first we'll have to look at the F&O names. Adani Enterprises has, recovered almost 20% on an intraday basis, and it has managed to snap a 7-day losing streak. Adani Ports up 7%. There's been a clear outperformer up for the 4th straight session. And when you're talking about Ambuja and ACC, both are up, almost 5% on an intraday basis. On the other hand, when you're talking about the cash stocks, some of the pain persists here. Adani Transmission, after a brief intraday spike, once again down at the lower circuit. And when you're talking about this particular name, 14 straight lower circuits is what this name has seen. Adani Green today is in the green, but it's managed to snap a 6-day losing streak as well. Adani Total Gas, the pain is very clear out here. 23 straight lower circuits for this particular name. Adani Wilmar, NDTV, as well as Adani Power, all of them today have managed to recover.
Okay, got that. Thank you very much, Vivek, for all the details there. The Adani Group definitely hitting it in the headlines this afternoon. Let's take the conversation forward to Mehraboon Irani. Mehraboon's joining us this afternoon. Mehraboon, great to have you on the show, as always. Since we are on the subject, Vivek telling us that the Adani companies are trying to go meet investors, do roadshows. What's your sense? I mean, at least the bigger stocks like an Adani Enterprises or Adani Ports, they have recovered 30, 40, in some cases 50% from the peak, or others, I should say the trough of the fall. Would you be a buyer?
Surabhi, why did you have to ask me this question? But let me put it this way. I think if you ask me, has there any wrong which has happened? I think market manipulation, if it's a wrong, if it's a crime, yes, they are criminals. But have they raised money from the public? I don't think over the last 21 years they have raised anything more than 2,000 odd crores from as far as Adani Wilmar goes. So there has been no money raised by the group over the last nearly 20 years, if I am not mistaken. The point is the value in the Adani Group stocks. I think nobody will dispute the fact that Adani Ports, in fact, there are so many buy reports available in the market. I think despite the fact that, I'm talking about before the crisis started, which happened in the last week of January, first week of Feb. I think there were buy reports and people were ready to buy the stock at 800, 850 rupees. Let's not forget it. Recently also there have been a couple of buy reports which have come. So Adani Ports certainly has a lot of value in it. As far as Adani Enterprises goes, I think it's a combined value. And if you have 3 or 4 stocks hitting the lower circuit every passing day, it's obvious that Adani Enterprises stock will also remain under pressure. Among the others, personally, I like Adani Green. I think something tells me that the stock possibly could have been bottomed out this morning. This is my gut feeling. The business is good. So as far as business goes, as far as execution goes, there was no doubt that they would have done a great job about it as long as the water was flowing from the tap. So now that the water is not going to flow for quite some time to come, there are problems as far as whether they will be able to execute this project properly. And over the last 25, 30 years that I've seen this market, Surabhi, I think, and you will definitely agree with it, whenever you get tainted, your valuations start dropping. Now, where it bottoms out, where it comes down to, honestly, there is no answer. So Ambuja also, if you ask me, I think great bet at the present level. In fact, I had suggested that the stock was a great buy even at 400 rupees. But when you are tainted, as I said again, the valuations contract sharply. So that is possibly that has happened. Somewhere, hopefully, 6 months later, we will look back and say, oh, this phase had come where the stocks were available at this valuation, especially as far as Adani Ports and Ambuja goes, and even maybe Adani Green. So this could be an opportunity, but I don't think anybody over years, forget the fact of going and buying a big quantity, forget the fact. You asking me this question and me coming out as trying to sound positive, itself lacks a little bit of depth.
Mehraboon, I'm just trying to do my job here. The question was very simple. There are people who would look for bargains out there, and we're not here to root for one party or the other. And while we're on the subject, I must put on board over here that as of now, at least officially, formally, there is no regulator that's put out any sort of a statement against the group or any kind of reports of stock price manipulation. So we're just sticking to the facts here. Of course, you're entitled to your views. There are others in the market who will have theirs. But our job is to report the facts as they are. And of course, we are awaiting the regulator or the finance ministry's comments on this. But as of now, nothing official about their role with the stock prices or the markets. Prashant, just wanted to put that on board. I mean, that's a disclaimer. We're simply reporting facts as they are available in the public domain.
No, fair enough, Surabhi. Mehraboon, hi, afternoon. Let's just talk about the market itself, which I'm sure you have a keen eye on. And I'm sure you're getting asked this question. What next after 7-8 days of very sharp cuts? Is there a? I mean, the common sort of refrain is that, well, we're down 7-8 days and a reversal is on the cards. But is there a compelling reason? I think that is what is missing, I guess, right? I mean, no real impetus to buy and buy now or today. Your sense, Mehraboon, near term.
honestly, there's complete fatigue if you ask me, Prashant. I think just nobody is interested in buying anything right now. I think it's like you go to the office or you sit at home, switch on the terminal, look at the terminal and say, oh, what's happening? What's happening? 3:30, 3:45, switch up the terminal and say, oh, one more day has passed, one more day has passed. And according to me, this is the state of the market because I use the word fatigue. So have people pressed the sell button? My answer would be no. Will the market force them to press the sell button and see lower levels? I think distinctly possible. Before that, if we have a rally, we have a rally. I think I heard you, Prashant, earlier in the show that, and you were dead right when you were saying 8 days in a row, why should the markets not fall for 3 more days? But I personally believe that could be a bounce coming very soon in the market. Have we bottomed out? Maybe not, because let's not forget the fact that even last year, the market, besides maybe the PSU bank stocks and the Adani stocks, I think the market hardly did anything. So somewhere around the line, the valuations are catching up. Somewhere on the line, we all know that other economies are opening up. There's a great gap between the valuations. Not much of money has come into emerging markets. So whatever was there, some of the money is going out and going and sitting in some other markets. So you are having FI negative figures. And people somewhere have got tired of buying. So this is the phase which one may have to sit on some cash, wait for stock-specific opportunities and not bother too much about what the indices do. So 16,000 or 16,500, if it comes, it comes. So even today, if you look at the market, when is the last time, Prashant, you have seen the Adani Group stocks doing well and the index not doing well? I think today, if you look at an ITC or a Reliance, they are in the negative. The market bet is quite good. The mid cap is doing well. The small cap is doing well. These are possible indicators that we may have a small rally before, God forbid, we may falter again. So I would say one has to be very careful. The stocks, sectors like infrastructure, railways, paper, which everybody likes, those stocks, honestly, as far as valuation goes, are not very cheap. They will do well. The companies will do well. The stocks will do well. But they have not shared too much of weight. Whereas the market favorites are the specialty chemicals or the IT sector. If you look at the valuations, what they were a year ago and what they are today, quite a few people have lost quite some money in these two most favored sectors as far as investment.
Below 17,300, the mid-cap index is holding up with a gain of 0.5%, but many of yesterday's winners are losing in trade. So Electra Green Tech is down 7.5%. It had rallied hard over the last 2 days. SpiceJet numbers were good in Q3. The company has plans to offload its cargo business. Yesterday, the stock rallied, but today it's come in for some amount of profit booking. And Vedanta, of course, has been hammered. Vedanta is now down 6.5%. But another talking point for the markets is going to be the auto sales data for the month of February, which is due tomorrow. Sonia is here to decode the key trends for us. Sonia.
Well, the month of February has seen some large trends emerge in the auto space, and I'm here to tell you all about that. Let's start with the commercial vehicle space, which could see good growth in the month of February. Now, dealer surveys indicate that there is pre-buying for commercial vehicles as prices are likely to rise by 3 to 4% from April of this year, post the implementation of the real driving emission norms. Now, this could lead to a 15 to 20% growth for CV makers in February, the likes of Ashok Leyland. The other big trend that we're noticing is the risk of poor monsoon and El Nino, which could hit the rural market. Now, this could impact entry segment cars, two-wheelers and tractors demand, and that could affect growth for companies like Maruti Suzuki, Hero MotoCorp and M&M the most. If we look at the two-wheeler space, the pattern has been pretty similar for a while. Two-wheeler wholesales continue to be weak and volumes are expected to remain down 28% to 30% lower from the peak that we saw of Jan of 2018. Remember, two-wheeler exporters like Bajaj Auto have spoken about steep production cuts due to an export slowdown. So, that is the expectation that we have. And finally, expectations of further price hikes from April 2023 as new emission norms kick in could dampen demand for passenger vehicle players too. Nomura put out a note where they said that even luxury car sales have declined 20% year-on-year in February, suggesting initial signs of a slowdown. So there's a table that will come up for you to give you an indication of which way things are heading for individual companies. We've broken it up into a couple of parts. First, of course, is the passenger vehicle companies, Maruti and M&M. As you can see, there's not too much of a growth for Maruti Suzuki, while for M&M, the growth has been pretty good because of the new launches that they've had. We follow that up with the commercial vehicle space, where, as I said, there's going to be a decent amount of growth for all three players, considering that CV sales are expected to rise given the pre-buying. And then you have the ailing two-wheeler sector, where as you can see, just for Hero MotoCorp, there's a bit of a growth, but the rest of the lot, it has been under quite a bit of pressure, particularly Bajaj and TVS Motor, where the growth has not been much. In fact, there's a steep fall for Bajaj Auto because of the production cuts that I mentioned. Finally, Royal Enfield, the growth has been good. The premium end of the market has been doing better, as we know, and hence Royal Enfield is a big beneficiary of that. Back to you.
All right, thanks a lot for that. Sonia, well, Mehrbun is still with us. Mehrbun, what do you make of the auto pack? And is there something you like at current levels?
No, honestly, no. I'm not in a hurry to buy because we are possibly heading towards a phase, maybe for next 1 or 2 quarters, where discretionary spend and on the one hand could come down, and on the other hand, we could possibly see 1 or 2 more rate hikes coming. So that being the scenario, not in a great rush to go into buy into them. Overall, I like the sector.
Okay. Got that. Let's just look at some of the other key movers and shakers right now. By the way, Cipla is at the lows of the day, 4.5%. The street is still trying to figure out how significant these observations are, the Form 483 that was issued for their Pithampur plant. It's an important one. It contributes 15% to the EBITDA. That's what we had from Ekta. Stocks under quite a bit of pressure because at least some of these observations seem to be slightly serious in nature. That's Cipla down. Speaking of stocks that are falling, Mehrbun, Vedanta. Nigel and I spent a lot of time on our digital platform discussing this just a while back. Now, the issues are with the parent, but obviously the Indian listed entity is feeling the heat. What would you advise here?
Honestly, stay away. I think I am not ruling out the fact that they will possibly not default at the end of it all. But I think when the bond prices crash, I think that is somewhere most of us missed out. Even the Adani Group's problems started with the bonds coming off very sharply. Well, some of us noticed, but beyond the point, we never bothered too much about it. Now, the same thing is happening as far as Vedanta Resources, the bond paper goes. I think available at 70 cents, which is just nothing else but something like junk. I think that is indicating that there could be some problems ahead. As far as Vedanta goes on the whole, I think the profitability was moderating, the capex is continuing, the dividend payouts which the company is making on a regular basis. It shows that leverage is going to possibly increase in the current year. Now, can the profitability improve next year? Why not? I'm not saying it will not improve, but a lot depends on the global outlook. A lot depends on what the LME does as far as metals goes, as far as oil goes, as far as gas goes. But if you look at the debt, I think Vedanta Resources, which was listed once upon a time, I think Vedanta Resources has brought down its debt from about 10 billion to maybe around 8 billion. Good. The dividend payout helps them to bring down the debt further. But they have to meet an obligation of somewhere around 1.5 billion over the next few months. This is where the problem started. They decided to sell off their international zinc business to Hindustan Zinc, which is cash rich, for $2.98 billion. And as per news reports, the government has not liked it. The government has in fact gone ahead to threaten legal action if they decide to go ahead with it. And if they don't go ahead with it, will Vedanta be able to raise resources or raise cash in the next 4 to 6 weeks? I think that is a very difficult call right now. The management, of course, will say they will do it. I don't have much of doubt they will ultimately manage to do it. But in this scenario, despite the sharp fall in the share price, it's 8 days in a row the stock is falling. I don't think, at least I have the guts to go and buy into it. Vedanta is never a stock which I've recommended as such. I've been following this company and the management for the last 20-25 years. I have never been interested party as far as wanting to buy the stock goes. So at the present level, despite the stock coming off for 8 days in a row, I honestly don't have the guts to go ahead and recommend the stock, saying that problems will be taken care of.
All right, Mehrbun, we'll leave it there. Thank you very much for joining us. Good speaking with you, as always.
Thanks.
You know, just pick up, just have the Nifty intraday up if we can. There's pretty wild moves. You know, while just 5 minutes back, we had a big monster move, which was worth some 60 points, by the way. That's the sharp spike that I'm talking about, which got almost immediate. We were down just 40 points on the day, just 2 or 3 minutes back, which has kind of gotten sold into again, and we're down right there. It's almost as if it never happened. And starting, 2 o'clock, you know, so consider this, 2 o'clock, the market was at 17,320. You know, 10 minutes later, it lost 60 points, came down to about 17,260. At about 2:30, we came back all the way to 17,320, so full recovery. Then 250 or so, another 50 odd point sell off, then a 60-point recovery, and of course we've got the latest move which is underway, and this is only in the last 1 hour or so is what I'm talking about. So very sharp moves, 50-60 points one way or the other, eventually not amounting to much as we're still down 90 points, but we'll see that there is a bit of a fight which seems to be emerging at lower levels, which is getting sold into, but I think this is something which needs watching. Now, Cipla is another one which I think has been lower from the morning, but I think it's lost more in the last half hour or so, down over 4.5%. Ekta is here with more on this one. Ekta, over to you.
Thanks for that. Well, the big news on Cipla is that we did manage to access those 8 observations which were issued to the company's Indore facility. It was inspected from the 6th of Feb to the 17th of Feb. And it is an important facility because it is around 20% of the EBITDA estimated for FY23. And it does manufacture oral solid products as well as inhalers as well. Now, the reason why the stock is down is because of the nature of the observations. The street is worried that the company will not be able to solve these 8 observations. Now, while they do not look like data integrity observations, they do look like complex issues which will probably take some time for Cipla to resolve. What that means is that one cannot rule out a re-inspection by the US drug regulator in order to see whether the facility is in compliance, or maybe even an escalation to an official action indicated status, which is basically communicated within 3 months of the inspection by the US drug regulator, or even worse, a warning letter. What all of this would mean is that key drugs such as Advair generic, which is filed from this particular plant, could then be delayed. It is estimated to be launched in Q1 of FY24. Now, with the possibility that this particular compliance issue could take a few months out, that means that Advair generic could be delayed further. It is estimated to be around 5% of the FY24 and FY25 estimated EPS.
Okay, thank you very much for that. We're now joined by Abhiram Eliswarupu, the head of India Equity at BNP Paribas India, on the show now. Abhiram, thank you very much for joining in. Just earlier today, we were having a chat with Sunil Tirumalai of UBS, and he was telling us the earnings downgrade is only going to accelerate from here on, and FY24 may end up seeing an EPS growth of only 10 to 11%, which is lower than what consensus expectation is, closer to 15%. Where do you stand on the camp of earnings growth from here on?
I'm not fully disagreeing with that comment, actually, because if you take the history of our earnings forecast over the last, let's say, 10 years or so, every year we have started out with a high estimate and then kept cutting them. I think last year was probably one of the few years where the cuts weren't that much. If you see on-the-ground feedback from both on the consumer side as well as from corporates, it's turned quite, let's say, measured over the past month or so. And there are signs that the rural economy is also not going to pick up, looking at the monsoon situation. But also, over the past 1 year or so, we saw urban doing quite well, but that is starting to reverse a little bit. So expecting some kind of an earnings cut from here on is not entirely ruled out. Over the past 3 to 6 months or so, we've seen maybe about 4 to 5% earnings cuts.
4 to 5% earnings cuts from here on. I guess that's the reality that the market is in the process of pricing in. Abhiram, hi, good afternoon. So tell us, if we're going to be in this kind of a challenging market, then where would you place your bets? Just in terms of the strategy, the top sectors or the themes to back and stuff to stay away from.
Let's step back a little bit on this. I think you just take the last 3 months or so, maybe 4 months. We've seen valuations correct to the point where they're not very far away from, let's say, 5-year averages. Earnings, as I mentioned to you, be cut to some extent. But conversations with investors seem to suggest that everyone's in a somewhat of a wait and watch mode, waiting for the next catalyst. Now, if we are looking at on the margin earnings being downgraded and not upgraded, so chances are that the market outlook in the near term, at least, is quite lackluster. If you take, however, a 12-month view, then we see high single-digit returns from here, maybe low double-digit returns over the next 1 year or so. But my sense is that conversations are getting increasingly stock-specific. In terms of sectors, I think there are opportunities across sectors, at least on a relative basis. So banks, for us, seems to be the biggest overweight position. especially private sector banks. Then we are a lot more selective. If you move down, we still like some parts of IT. In the healthcare space, we like hospitals and some specialty companies. And a little bit more going down, I think the space where we're not very particularly enthused is actually the consumer space, where we think that a time correction is on its way and that could continue for the rest of the year.
Abhiram, what's the global team at BNP really telling you? Which way are flows headed? Somebody yesterday was making the point that when the enthusiasm on China fades, money will start coming here. The selling perhaps stops a little bit. Where are we on that? I mean, just some indication, because this is a broad-based risk-off move. Go on.
Yeah. I think the last time I was here, I was talking about a potential switch away from India to China. That's a theme that pretty much everyone's been running with over the last 6 months or so, and that's played out to a large extent. I think the outperformance of China over India is close to 50% or so since end of October. Now, that said, if you kind of create a bull case for China versus India, it's still possible to justify a higher upside for China than India. So I suspect while that trade has played out to a large extent, it is not entirely over. So I think at least the next 3 months or so, you may see that happen. At the moment, investors outside of India at least are waiting and watching data from China to kind of back the view that China is starting to open up and the numbers there are going to start to improve. Now, in the bigger picture, which is if you include the US here as well, we think that there'll be a couple more 25 bip rate hikes in the US. But overall, I think the market may be getting a little complacent about rate cuts in the second half, which some quarters of the market are expecting. If you see data coming out of the US, it's really strong, especially around employment, consumer data, etc. Even services data was pretty good, which suggests that chances of cutting rates in the second half of the year may be low, and those expectations may be somewhat misplaced. So overall, from an equities perspective, we are a lot more sober on developed market equities. Within the regional portfolio, we are neutral India, and we're still positive on China. As I mentioned to you, the chances of a little more upside or an outperformance of China over India is possible.
Okay, all right, Abhiram, thanks so much for stopping by and in fact giving us your view on the markets. But the markets have been moving around. We're getting into the weekly expiry for the Nifty Financial Services Index as well. So let's see whether or not we get a bit of a move. That bounce has got sold into. But Nimesh is joining us as well. Nimesh, what are you making of today's market action in terms of flows?
Hi, Nigel. So, before I talk about the overall markets, if you see there were flashes about Bob block in Bank of Baroda as well as in CG Power, I guess that's largely to do with the MSCI rebalancing because those two stocks got added to the MSCI index. So that's why you've seen those volumes there.
Bank of Baroda and CG Power.
And CG Power both got included into the MSCI, and Biocon is getting excluded. So maybe you'll see some reaction on that stock as well. On the markets overall, while the Nifty is down 100 points, there is a lot of traction in the broader markets. That's the overall feedback. Even in terms of flows, while it's mixed again, the volumes are on the higher side because of the MSCI rejig. Also, I understand there's going to be a small market at close basket buying non-of MSCI stocks in today's trade again. So there is a support from the larger FIs for sure for the last many days, and that continues in today's trade as well. The mid-cap index is at 1%, but I guess that's largely to do with the Adani stocks as well. A lot of the Adani stocks are buzzing in trade. I've seen a big rebound from the recent lows, so that's helping the broader markets as well. And even the sentiments to some extent has improved to a larger extent in the mid-cap and in the broader markets. The other sector which is doing good is the financial names. Even in yesterday's trade, while there were a lot of negative flows in the bank stocks, those stocks went up and the index was up 1%. So it looks like some bit of buying is back in the financial names, especially the bank stocks. So that is one big large sector to track in the days to come. That's the overall feedback. But broadly, volumes are on the higher side. We have an MSCI rejig, but there is buying at a leading FI desk, especially in the last half an hour.
Okay, all right. Let's get stock specific then. Nimesh, what are you picking up?
Okay, so in terms of individual names, the first stock is JSW Energy. Out of the blue, that stock is up 12-13% on big volumes. I believe some bit of HN action is back in that particular stock. And also, even after today's move, the stock is still down 20% YTD. So that's the kind of underperformance we've seen, and now a bit of an uptick in that particular stock. So that's the first one. The second stock is Bank of India. Similar to what happened to JSW, is happening in Bank of India as well. from the recent lows. That stock is seeing a bit of a bounce back, some good accumulation as well. In fact, today there was a Morgan Stanley tactical idea as well on Bank of India, largely because the stock is corrected 25% from the top and the valuations are compelling. So maybe you're seeing a bit of an uptake in that stock because of those reasons. The third stock is Kirloskar Oil. Again, that stock has been consolidating in a narrow range, up 2% in today's trade, but I'm expecting a large block in Kirloskar Oil very soon. So that's something to track in Kirloskar Oil going forward. And the last stock is Paytm. No specific reasons, but the stock is down 700%. I guess largely on fears of a large block coming in Paytm very soon. Remember, there are two large strategic investors who might look to sell in Paytm. So that's the reason why every now and then there is a fear. And maybe that's the reason why that stock is under pressure today.
Nimesh, thank you very much for that list. By the way, it's all about the banks yet again. Yesterday, the banks outperformed even as the benchmark indices were in the red. The Nifty Bank was up nearly about 1%. And today as well, pull up that intraday chart and you would see a near 250-point intraday recovery taking place in the Nifty Bank just in the last 1 hour or so. Again, it's been sold into partly in the last 10-15 minutes. But again, the Nifty Bank is flat vis-a-vis the benchmark indices, which are down 0.5%. So relative outperformance continues for the banking stocks. Get into a break. As always, we'll tell you what you can buy today, sell tomorrow. Calls from our technical experts.
Us on closing bell, and let's focus on what has been one of the biggest stories of the day. Vedanta, even as we're getting set for the last 10 minutes of trade, still down about 6.5% as yields on parent Vedanta Resources bonds surged. The stock did come off the lows after the company's spokesperson told CNBC-TV18 that the company is in a comfortable position to meet its upcoming maturities. Nigel, connect the dots for us and tell us what all is going on over here.
Well, that's right. Vedanta Limited is under pressure as the street fears the default at the promoter, that's Vedanta Resources end. Now, the long-term debt maturities for the next few years are a little more than $7 billion odd. In the first half of FY22, well, 24 that is, there are maturities amounting to nearly around $900 million which are due. Since there is the fear of default on the bonds, the prices have been falling. And as we know, there's an inverse relation with the bond yields. The bond yields have moved up. Well, the promoter entity has a large holding in both Vedanta as well as in Hindustan Zinc. The problem is most of these shares are pledged. So there is a fear that some of these pledged shares can in fact hit the market as well. Well, the trouble started as Hindustan Zinc's plans to buy out Vedanta's international zinc assets had hit a roadblock as the Government of India opposed this transaction. Remember, the Government of India has 30% stake in Hindustan Zinc and they have board representation as well. Now, the proposed transaction was that Vedanta would sell its zinc international business to Hindustan Zinc for around $3 billion. Now, that deal would be done at around 10 times EV upon EBITDA. The other negative is it would drain them of all the cash in its books as well. Well, is there a way out for Vedanta Resources? Well, the answer could probably be yes, as they could use the credit line of banks to refinance the debt in the near term. They could also approach the Government of India and look to rework international zinc. Remember, the Government of India has asked the company to explore other cashless methods for the acquisition of the assets, and also maybe Hindustan Zinc simply pays out a large dividend which flows to Vedanta Resources via Vedanta Limited. Valuation-wise, well, the stock is attractive. It trades at around 3.5 times EV upon EBITDA. Well, we reached out to Vedanta Group, and the spokesperson replied to CNBC-TV18 query that they are in a comfortable position to meet the first half of the year's maturities, adding that there is no question of default and accept around 6.8% shares. Other holdings are not. There is no risk to anyone selling more shares in the market. Back to you.
Okay, thank you very much for explaining that so beautifully to us, Nigel. We'll talk more about Vedanta with our experts. But for now, we've got Mitesh Thakkar waiting by to tell us what you can buy today to sell tomorrow for a reverse trade. Mitesh, the stocks that are on your radar?
So I think the paint stocks are doing very well, Berger and Asian, and I think, Berger Paints has given some kind of a strong reversal. It's about 4.5% higher and very good positions of the indicators on the intraday chart. So BTST with a stop at 576, targets of 595 for tomorrow. While Bharti is on the negative side, so they are an STVT with a stop at 747 for targets of 725.
All right, Mitesh, thank you very much. Good speaking with you. Jay Bala is now joining us of cashthechaos.com. Jay, of course, has been for a few months cautioning, sort of advising caution, saying that lower levels are coming, and that view has been working out very well. Jay, good to have you back on the program. Thanks very much. So what's the view? I mean, the budget day low is gone, and we are now treading water much below those levels, right? I mean, yesterday the market made a low. We saw a decent pullback, but well, today, boom, that went. New low, 17,255. What's your sense near term?
Yeah, thanks for having me on the show, Prashant. See, the markets have clocked 9 sessions of close below its open. So we got nine red bars, and 8 sessions of close below the previous close. So from the extreme short term, there is a bounce that's due. But all these bounces are likely to be extremely short-lived. I see the markets not going beyond 17,600, 17,700. And what has happened is the fall has actually broadened in the market. We see the Nifty small cap index and the Nifty mid cap index go below its September and December low, which are at the same levels. And the markets have gone below that. So basically, the fall has widened, and the breadth of the negativity is spreading to the market. And the nearest supports for Nifty is about 17,030, but the most significant support is at 16,750. These supports the minor supports will only offer temporary relief, but we got much more downsides to work with.
When you say a bounce, not a tradable bounce, you said very short-lived, so not a tradable bounce?
I don't think so, Prashant. It's going to be quite short-lived, and it's going to be quick. Probably, the market will open up with a gap on some days, and then it'll be near to the resistance point. So, it may not be tradable bounce, but it's for a person who's having a 1 to 2 day swing trading objective. It might work out for them.
Are you sensing strength in the banking space? Because the Nifty Bank is far away from its budget day low, even as the Nifty breached it. And even over the last couple of days, there has been relative outperformance from the banking stocks.
That's right. From the very extreme short-term, Rima, it's showing signs of strength, but don't be beguiled by it. It's actually hiding something very important. The India 10-year bonds is set to crash to fresh 52-week lows. If you see the bond yields, it's at 7.4, and we're going to see a cross about 7.8, 7.9 pretty soon, and that's going to have a big effect on the banks. So the short-term supports are about 170 to 38,110. So that's where this market is heading, and I would believe this is a short-term trap for the traders who are thinking the Nifty Bank hasn't broken the budget day low.
Jay, since you maintain your overall bearish stance on the market, two-part question. One, would you be willing to take a short trade on the Nifty now? And if yes, what would be your first downside target? And two, in terms of individual stocks, what would be your prime shorts?
Yeah. Taking a fresh shot at this level is a bit late. So I will wait for the markets to bounce somewhere close to 17,600, 17,700. That will be the fresh entry point or a place to add. When it comes to negativity, the metal with the PhD degree, copper, has clocked lower lows and lows high after September of last year. So, copper is going down quite below the 2022 low, in my opinion. So, I'm bearish on the metal space, particularly copper-related names. So, Hindalco is one such one. And, if you look at the charts of Larsen and Toubro, it's shaping up to be a head and shoulders stock. So once the stock goes below 2080, that will activate the head and shoulders pattern, and the objective will work out to somewhere close to 1800. So I'm from the frontline name, I'm negative on these two. And I think SBI and ICICI will also follow through later on. I've mentioned that the previous weeks, but on a fresh basis, Hindalco and Larsen are the ones which are looking negative at this point.
Okay, fresh negative at this point. The IT services index is something that you've had a view on, and undecided on that one? Waiting for the index to give you a signal, Jay?
Yeah, see, I've been bullish on the mid-cap names like Persistence, which has gone to record high, and I've also been bullish on Coforge, and as long as it stays about 38.50, and crosses the recent swing high before the negotiated block deal, I think it has potential to still go back to record highs. But the frontline names are the ones which are causing worries. So Wipros, Infosys, and TCS, they are not looking so positive. But as long as the Nifty IT index stays about 29,500, 29,300, we can maintain the positivity. But if it were to close below those levels, I think it will be a dent in the bullish case. But as long 27,900, that will bring in much lower levels for Nifty IT index. So watch out for what happens in the next couple of weeks. It's going to be pivotal days for the Nifty IT sector. It's been a slight outperformer, but if 27,900 goes, that will also fall into the negative territory.
All right, Jay, thanks very much. Good speaking with you. We're just counting down to market closing, so let's get this done today. 84, 85 points lower on the index is what we will end in terms of a cut with. So, the market broke below yesterday's low. We'll end under the 200-day moving average. Banks did a little better. Mid-cap and small-cap indices did far better. 0.5%, 0.75% gains respectively there. Market breadth, I think, was positive. And the Nifty also, many attempts at a bounce starting 2 p.m., all of which got sold into. But that bouncy bounce perhaps will come. But the worry is, as Jay said, those will be, according to him, very, very short-lived and not very tradable. We'll find out. For now, today, we are ending about 80, 85 points in the red. Rima.
Well, the big losers today in the pharmaceutical pack, it was Cipla. That's the top Nifty loser, 4.5% gone on the back of that Form 483 on the Pithampur unit. Dr. Reddy's under pressure, down 2.3%. Commodities took a beating, Hindalco, JSW Steel, Tata Steel. But the problem is heavyweights like Reliance Industries, ITC caved in today. Reliance Industries was down 2%, while ITC shaved off nearly 1.5% of its gains. On the gaining side, many of the Adani Group stocks. So you had Adani Enterprises higher in trade, but even Adani Ports, you had strength coming in on Adani Wilmar. In fact, all the Adani Group stocks, ex of Adani Transmission and Adani Total Gas, actually had a big up move today.
Yeah, I'm looking at just some more names. Paytm has had a pretty weak session. It's down 5.5% as the bell goes off. On the flip side, JSW Energy, 12% higher. You had these sporadic moves in the mid-cap space, which were on the upside. Z is up about 6% now that the F&O contracts are getting back added on. Karnataka Bank, which is getting added into the MSCI India Small Cap Index, 6% up over there. Lemon Trees up 6%. Very interesting moves in the mid-cap and small cap arena, really. But otherwise, for the large caps, the problems pretty much continued.
Okay, 17,300. That's where the Nifty has largely ended. Post-market hours today, remember at 5:30 p.m., we've got the India GDP numbers. This will be for the third quarter. And then tomorrow, the auto sales numbers for the month of February will trickle in. That's what's lined up over the next 24 hours. It's a wrap and closing bell. Thank you for watching. But don't go anywhere as our Tuesday special commodity